Good afternoon. You're watching Midcap Radar on CNBC-TV18. I'm Hormas Vatakia. With me is Vivek Iyer, and the markets have cooled off, and it's been a dramatic U-turn from the highs of the day. At one point, it looked like we were going to build on to yesterday's gains, but it seems like that is not the case as of now, Vivek.
Good afternoon, Hormaz. That's right. Monday, steep sell-off. Yesterday, a bit of a recovery. Hoping today that recovery sustains, but it's not been the case so far. But we have quite a lot lined up on the show. Let's start off with the top headlines. Benchmarks give up all intraday gains, dragged by banks and financials. The Nifty currently swinging between green and red, and the Midcap index too falls over 400 points from the intraday highs.
Dixon shares have surged after brokerage MK initiates coverage on the stock with a buy rating and a 20,000 rupee price target. Interestingly, MK is now the fourth brokerage to predict the stock to cross the 20,000 rupee mark.
Midcap shares spike after the company announces that it will acquire 49% stake in automotive products maker Flash Electronics. The acquisition will cost Midcap rupees 1,372 crore.
QSR player Devyani International has surged over 6% after Macquarie initiated coverage on the stock with an outperform rating and a 230 rupee price target. The brokerage says that it is confident on KFC and McDonald's formats, along with the read-through from Yum China, making them the preferred stock.
The board of Aditya Birla Fashion clears the preferential issue of shares to raise near rupees 2,400 crore to trim debt, while the promoters will bring in close to 1,300 crore. Fidelity Group will infuse over 1,080 crore. A QIP to raise up to 2,500 crores is also on the cards.
Just before we get to the markets, some important flashes on your screen, and you pull up both Bharti Airtel and Indus Towers. Both of them are seeing a surge from the lows of the day. The Delhi High Court has decided a tax appeal in favor of both these companies, Bharti Airtel and Indus Towers. Indus Towers too trading with gains of around 4.5%. At one point was up almost 5 to 6%. But a positive news nonetheless coming in for both these companies. Now the Delhi High Court has granted relief to tower companies. They're saying that they are now eligible for input tax credits. So it's an important development for companies like Indus Towers and a cascading effect on Bharti Airtel as well. With Bharti Airtel, not a significant stock reaction, 0.5% higher there, but important developments coming in there for both Bharti Airtel and Indus Towers. There, the Delhi High Court ruling a tax case in their favor, and they have quashed the show cause notices that were issued to these companies denying the input tax credit. So important developments there coming in for Bharti Airtel and Indus Towers. The Delhi High Court has also said that it is wholly untenable for towers to be termed as immovable, and they've also said that tower companies too can be eligible for input tax credit. The Bharti Airtel there 0.5% higher, and Indus Towers trying to recover after that slight bit of a cool off that the stock has seen from the highs of the day. But the markets though have cooled off so far. The Nifty is now slipped into the red. We'll get to more on that, but we have corporate conversations lined up, Vivek.
That's right, Hormaz. A very important development for the entire telecom space, like you just highlighted. Well, the company in focus today is Shoppers Stop. The stock shares have surged today after the company posted a strong set of Q3 earnings. The company posted a double-digit revenue and EBITDA growth. To discuss this and more, we are now joined by Kavindra Mishra, Managing Director and CEO at Shoppers Stop. Thank you so much, Mr. Mishra, for joining us. First up, Q3 has been a strong quarter. 9 months consolidated revenue for you has grown by close to 9%. What are the early trends suggesting for Q4 so far, and early targets, if you've set any, for FY26?
So, Vivek and Hormuz, thank you for having me here. I think Q3 obviously has been very good for us, and what we are seeing is that the trend lines for Q4 should be similarly on lines of Q3. We are guiding for a 5% kind of a like-for-like growth for Q4 as well. Too early to comment on FY26, but I think directionally we are on the right way. So I think a lot of work on whether we are working on the IPs or premiumization. I think a lot of work is happening to ensure that customers come to our stores, and in our journey of premiumization, we have been able to drive that. So I think it has been quite a good quarter for us, and we expect a similar thing in Q4 as well.
So by similar thing, Kavindra, good afternoon. First of all, thank you so much for joining in. By similar, do you also mean that your like-for-like growth, which was only at 4% this quarter, despite it being the festive season, would stay as is? What's your outlook on that front? What do you expect to end the year with, if you could share a number on that?
So I think Q4 would be close to a 5%. That's what we are looking at, and that's what we are also guiding in our calls. Yeah.
Understood that. Let's move and speak about the beauty business. Beauty business for you has seen around a 3% growth. Players like Nykaa, online players, have reported a little over 30%, gross merchandise value growth. So clearly, when you're comparing it to them, of course, they will be off a lower base too. Why is there such a stark underperformance, and what are the early trends suggesting for Q4 and FY26?
So beauty, actually, if you look at it, and if you look at a larger spectrum for the year till date, beauty is the highest performing categories for us. So if we look at the way we operate beauty, which is more on the premium segment, that continues to do well. In fact, fragrances has led this quarter's growth by 14%. I think we have faced some issues in the masstige segment, but the call for shoppers is always the beauty is driven more around experience and less on the value offering. And we'll continue to work on that. And my sense is that Q4 should be, again, beauty should be one of the leading categories for us.
So by leading categories, would you aspire to go back to double-digit growth in the beauty segment?
Yes, definitely.
And what are you also targeting from the First Citizen members and the private brands, Kavinder? Is there a target share of revenue that you have in mind?
Yeah, so I think we are around 18% in the apparel space on private brands. And what we have been seeing is that it has become very profitable, because what we have done is over a period of time, we have been able to rationalize the brands and put the brands which are right for the business. And that should continue. So this 18% over a period of time should be anywhere between 22 and 23%. And that's a journey which we are on. A lot of correction has happened in the last 3 quarters. And I think we are on the right zone right now.
Mr. Mishra, one thing which we want to understand from you is the average transactional value. We understand that it is now up almost 6% on a year-on-year basis, closer to the 5,374 rupee mark. Now, the average spend or the average selling price too has inched up. Given that, are you now mainly targeting premium customers? And how do you see this particular trend play out Q4 as well as FY26? What are the targets over the ATV as well as ASP?
So I think the good thing is that while the ASPs and the IPT has gone up, the volumes continue to stay. So for example, in Q3, we have seen that trend continues. And my sense is that this 5,300 should be growing on a similar 5%, 4 to 5% quarter-on-quarter kind of number. Because we are changing the mix, we are getting more premium brands. And for Shoppers Stop, the strategy is very clear. We want to be the strongest premium omni-channel player in the country.
Kavinder, you had planned on opening, you have around about 109 department stores, if I'm reading it correctly, and you opened around 16 during the quarter. How many do you plan on adding this quarter, and what's your store addition target for FY26 if you have set that up as well?
Yeah, so we should be close to, we should see close to 6 stores opening in departmental store format in Q4. And our guidance for the next year is anywhere between 12 to 15 stores, large format stores.
And if you could split that up as well across various segments?
No, so I'm purely talking about the departmental stores. On the other hand, we have a format called Intune, which is our value format. We are close to 59 stores right now. We should open 26 stores this quarter. So we should be ending the year at 85 stores. And our guidance for the next year is anywhere between 90 to 100 more stores.
Mr. Mishra, just moving on to that particular point, private brand sale actually went down 2% on a year-on-year basis, forming close to 12% of gross sales and around 18%, and for apparels around 18%. How do you see that particular trend panning out, especially when you're talking about private brands? It's inched slower. Is that a bit of a concern?
No, it is not. Actually, what has happened is that when we looked at our entire portfolio, we have rationalized the private brands and said, let's have the brands which have got the right to win. And it is not only driven by increasing the value as a business, but whether they are contributing more in towards the margin. So I think we have taken a profitable growth as a strategy and not only looking at a top line. And what we are looking at, that we have clearly seen the needle move in Q3, and we expect that to move in Q4 as well. So my sense is that this 18% apparel mix of PB will eventually be settled around 20 to 23% over a period of time. But all that should be very, very driven by premiumized private brands and also driven by high profitability and margins.
Mr. Mishra, last couple of questions from our end. First up, you've launched a new beauty brand called Joyology. So what are the internal targets you've set for yourself over there? What kind of segment does that particular brand target? Secondly, First Citizen, we understand that you saw significant amount of repeat sales. So what is it that you're targeting as far as First Citizen is concerned?
So I will answer both of them. So Joyology is for Gen Z. It is for a much younger customer. It's so while we have a brand called Arcelia, which is more fragrances, this is more on the skin and beauty, and we have just launched it across 40 stores in this quarter, and we will see a journey of that. It's too early to give you an exact number, but the initial traction is very good on that. First Citizen customer and the way we have been driving that particular piece is phenomenal. We had the best ever quarter in terms of the black cards, in terms of silver card signing, repeat. So my sense is it will keep on growing, and we should be anywhere between 80 to 83% on a stabilized basis from the First Citizen customer base, with a 68% coming from repeat customers, 65 to 70, and the balance coming from new customers who become a First Citizen customer for us.
All right, Kavindar, thank you so much for joining in and sharing with us the views on the road ahead. Wish you good luck for the rest of the year as well. The management there of Shoppers Stop. The stock significantly off the highs of the day, but still holding on to gains of just about 1%. Little time for a short break. The Nifty continues to remain choppy, but what are the charts indicating? Jay Thakkar from ICICI Securities joins in on the other side to answer just that and share some trading strategies as well. Stay tuned.
But there are a lot of other players in the market who seem to be wanting to bet on this opportunity, the likes of Zomato, Swiggy and others.
It's almost like starting an airline but not having an airport. When we do one Lollapalooza, we're creating a city overnight and then tearing it down. It shouldn't be like that. You need public parks, you need arenas, you need venues, you need stadiums.
There are a lot of other players in the market who seem to be wanting to bet on this opportunity, the likes of Zomato, Swiggy and others.
Yeah, but I don't think just putting big bucks is going to cut it. I think you've got to be really careful. When there are more players, there's more money that comes in. You have the ability to go out into the market, to use some leverage with government.
Are you looking at the possibility of going public?
It's not a priority. Bankers come and approach us every day. I'll show you a whole list of these. They love these books. I don't know, I've got these books lying here. They're like weapons of mass destruction.
Welcome back to Midcap Radar. Well, this is the show Midcap Radar, so we will be focusing on midcaps. Vamakshi today is standing by the wall to take us through all of the midcaps that are moving around in the session.
Well, good afternoon, Vivek. Let's first look at some of the stocks that are gaining momentum in trade today. Vodafone Idea is one such counter. That stock is up nearly 6%. Keynes Tech has seen a good recovery. It had been under pressure since the beginning of the year, and the stock has finally started to recover, up nearly 6%. Devyani International, look at the surge coming in on that one, 9.89% higher. And Anantraj is another counter that has slightly come off from the day's highest point, but is nevertheless trading with gains of somewhere around 5%. Apart from that, we have a lot of counters that belong to the capital market theme that are a buzz in trade today. 361 WAM up nearly 5%. HDFC AMC reported a good set of numbers yesterday. We have a couple of brokerage notes that gave a thumbs up to this counter. That stock is up nearly 5%. UTI AMC and BSC has been in focus over the last couple of days. Lots of brokerage notes have come in, and therefore the stock is up in trade. Apart from that, lots of realty stocks are gaining momentum in trade today. Let's look at Oberoi Realty. That's up 1%. There are some other counters like Phoenix Mills, Mahindra Lifespace and Sobha. They're also surging in trade today. But there are some stocks that are losing momentum in trade today. Keep in mind that all of these counters were abuzz yesterday, especially in the last hour of trade. All of these counters have corrected somewhere around 7%. Apart from that, there are stocks that are gaining on the back of strong volumes as well, and that includes Persistent Systems up nearly 4%, Welspun Living up nearly 3%, Minda Corp and Indus Towers. Of course, there's a news flow out here. All these counters are up in trade.
Mamakshi, thank you for that. By the way, before we go to Jai Thakkar, just quickly pull up the rupee, and that has seen a very, very sharp appreciation in today's trading session. Suddenly, from levels of 86.60, the currency has now moved back to 86.37. So a 0.3% appreciation seen there on the rupee in comparison to the dollar. Mind you, the dollar index has now cooled off for 2 days in a row now. That one was at one point was at 110.2. That has slipped back to 109 now. So that too is benefiting the rupee, and a lot of the other emerging market currencies. Also aiding this is the fall in the crude oil prices as well. So sharp appreciation in the rupee, 86.35 now as we speak. But the markets continue to remain choppy, and Jai Thakkar of ICICI Securities is joining in for a quick chart check. Jai, good afternoon. Thank you for joining in. You know, we at one point it did seem as though we did break that lower highs streak on the charts, but we're just not able to sustain that and move on to higher levels. What are the charts indicating now? And couple that up with your stock recommendations as well.
Sure. Good afternoon to you, Hormaz and Vivek. On a Monday, we saw, weak momentum, Nifty breaking its previous crucial lows of 23,263 Hormaz, and that is what we had witnessed last Monday as well. There was a sharp sell-off last Monday as well. Tuesday, we did see a recovery. So for a day or two, there is some sideways momentum, like we've seen last week, we are seeing this week as well. So this Tuesday as well, we saw some bounce back and a sharp bounce back in many of these sectors, and the beaten down names wherein there was huge short piled up. And now we are seeing some consolidation. Also, the kind of weakness which we have been seeing in dollar index since past 2 days is helping rupee to strengthen, as well as India VIX to cool down a bit. The main answer, I would say, Hormaz, lies in the India VIX, which we are anticipating to inch towards 18 or so going forward in this particular month, because of couple of events lined up, like US president likely to swear in on Monday, and thereafter budget as well. So I think it's likely to inch towards 18, and is currently trading around the levels of 15.5. It's generally paused around 16.1. So it has taken a pause there this time as well. Once it takes off those levels, I think the next round of sell-off should resume, and I think thereafter Nifty can be seen at 22,800 is what I think in the short term. At least in the Gen series, we are targeting 22,800. Unless 23,600 levels aren't taken off. So the reversal is quite far. It's just not 23,300, 400 Hormaz. It's 23,600 according to us. And if those levels are taken off, yes, Nifty seems to have formed a bottom. Else the consolidation, and thereafter one more correction down. So I've got two sell ideas since we have a sell on rise strategy right now. So the first sell recommendation is on Emphasis Futures. It's currently trading at around the levels of 27.76 right now. I'm expecting the stock to fall until 26.50, 2600 going forward. One can place a stop loss at 28.25. The Nifty IT has cooled off, and I think the sideways consolidation seems to be a distribution pattern, as well as we are seeing some short getting built up in Emphasis as well. CG Power is the next stock which I recommend to sell. It's trading around the levels of 612. It's a new entrant to the FNO series last month, and I think from these levels one can sell it. One can sell on rise as well, on the rise at around 620.22, placing a stop loss above 630, and one can target 585 positionally.
All right, Jay, thank you so much for joining in and sharing with us your views on the index and on specific stocks as well. By the way, just before we take that break, pull up Axis Bank as well, and that has slipped to the lows of the day now ahead of its results tomorrow, and that too is a big contributor to the Nifty cooling off from the highs of the day. Almost 3% lower is Axis Bank. Take a short break, more on the markets and specific stocks on the other side. Stay tuned.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
Welcome back to Midcap Radar. Well, the news is that we've seen quite a bit of a sell-off from the day's highest point. The Nifty at this point of time very near the flat line, but threatening to go into the red territory. The Nifty bank is the one that's underperforming. Most of the large cap banks are actually near the day's lowest point, and that is what has dragged the Nifty bank low near or down almost 0.2%. What's holding out in the green still is the mid and small cap indices, but they too have seen quite a bit of a sell-off from the day's highest point. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.